Welcome back to another video, and today we're going to be doing a stock market portfolio video because I didn't do one last week and I thought I'll do one now because actually a lot has changed again, in the sense, not in a good way, as it has gone down. As you can see probably from the thumbnail, you know it's gone down, and I did load up a little bit as well as on top of the fact that it's gone down in price, the portfolio, but that's natural, that's what's expected. If you look past the last few portfolio update videos, you'll see that it's been growing every single time I've uploaded a video. It's been always going up, and it's just a bit ridiculous really, because people that are into getting into investing or are new into investing, you're going to think your money just going to constantly keep going up. So it's good to do these type of videos where you're showing, well, your portfolio going down, and also there'll be times, like I've said multiple times on my TikTok and Instagram page, that you're going to have days where it's going to be, well, red days, constant red days, and there'll be the times where, well, especially with anyone that's watching my videos now, the people that stuck with me when there was red days as well, I really appreciate that, because naturally, as when you're in a bull market and everything's green, everyone wants to watch you and everyone wants to see what you're buying and everything. And because, to be honest with you, it's easy in a bull run, you can make so much more money, but it's the bear markets and holding through, going back into the bull markets. But yeah, anyway, enough rambling on. If you do want a free fractional share worth up to £100 on Trading212, then click the link in the description or use my code BEN on the promo code section on Trading212, and you'll get yourself a free fractional share worth up to £100 when you deposit just £1. The first one we've got is AMD, and obviously Nvidia reported their earnings and they beat their earnings, but they didn't hit the expectations that as people thought when it came to the data center revenues. And yeah, so people got a bit worried and a bit scared, and there's a bit of a sell-off in that sense. But AMD, to be honest with you, in the week down 3%, but we're up 44%. I think there's a lot more to go, a lot more room to go with AMD, especially in 2026. I think 2026 is going to be a good year for AMD, and yeah, I'm looking forward to it. And to be honest with you, if this can keep going down in price, I'd like to load up again a bit more. So yeah, we'll keep an eye on AMD. Fubo up 125%. This is an interesting one again. I've got 1,100 shares. Obviously, we've got the skinny bundle come in, and also we've got the merger. Hopefully, we've got more news coming very soon. It's been a while now, coming to the end of the year with the Disney merger. So yeah, we'll have to see how that is going to go. And I think obviously that's going to be a massive positive for Fubo. We could see this have another skyrocket up, and yeah, but obviously this is not financial advice. You don't know what's going to actually happen with Fubo in that sense, but obviously it's a positive thing for Fubo, so I would not be surprised if this stock did rise. So the next one, we have got Grab, and this one's just trading sideways, and it has since January. Is January the time I bought this stock? Yeah, we're down 3.8%, and well, we're actually up 3% because of the FX impact, but we're pretty much down, trading sideways with this stock. And if you look at the month, 3 months, it's just trading sideways. And yeah, on the year, it's gone up. And if I bought in September time last year, which I didn't know the stock at the time, so it's easier said than done to get into then. But yeah, I need to average into Grab when it goes down, but I've just been concentrating. Obviously, at the time, I was concentrating on getting my SoFi position up more, AMD up more, and then obviously Oscar I've been at the time. So yeah, it's been hard to even get some more money into Grab, because at the end of the day, you have more conviction in other certain stocks. I'm not saying I don't have conviction in Grab, because otherwise I would have sold Grab by now. I would have sold it. I do have conviction in Grab. So yeah, but like, it's just prioritizing. I wanted more money, more capital in SoFi. I wanted more capital in AMD because I felt that capital would have gone further, because I believe there's a lot more growth coming, and they're in that stage in their company where they are having that accelerated growth, crazy growth. They have turned profitable, and yeah, the growth is just crazy at the moment. So we got Nike, and this is just an example of, like, if I was wanting to buy into a company, I wanted to buy into Nike, and obviously I bought considerably high, to be honest with you, because you could have got this at $50 in April time when obviously the tariff and all that news was coming out and people panicking. So you could have got it at a lot lower price and I would have been up a crazy amount of money, but I'm up 4% still, even at the price I bought it, because I still thought it was a good price. And that's the importance of like averaging down and doing dollar cost averaging, because if I bought at the price I did and then I bought downwards, this would have been a lot lower and I would have had an average of maybe $60. Do you know what I mean? So you would have benefited a lot more, but because I'm not actually making a position in Nike, it was just an example. Like, I think this is a good price, it's something I would go and just show you what I think, where I would have been if I did put a position in, and so far I would be up 4% on it. Oscar Health, this is one that I just want to say, I have made a video on why and explain why I'm getting into Oscar, because I did a slideshow of all the information I've gathered over on X, Google, the investor relations, everything is just put into a slide deck, and I've just given you the information that I found and put it into a YouTube video. So hopefully that was helpful and gives you an understanding of like why I'm getting into Oscar. And I think it's a massive opportunity here, and I'm up 18% on Oscar, and actually on the week it's down 1.3%, and obviously you can see it's very volatile at the moment. This stock is a small cap, and at one point it was $17.60, but this is the one I've been buying. I've been showing in my premium channel group on Discord, which is £5 a month, and you get to see when I'm buying stocks and selling stocks and how many shares I'm buying and all sorts. So I'm really transparent with that. As soon as I do it, I share it. That's a link in the description, by the way, on the Patreon. And it's looking good. We're getting the position that I'm wanting. I said actually I do want to get this to 10% of my portfolio, and I believe at the moment it's about 5% of my portfolio. So I want to get this to 10%, so I've got a lot more buying to do. So hopefully the price can go down or stay the same as I average in, because I don't want to just lump sum a whole load of money, because otherwise my ISA allowance is just going to be gone, and I won't be able to deposit any more in an ISA, and it will have to go into the investor account, which is fine, which is totally fine, which I am probably going to do eventually. But it's just nice to have like an average every month, just in case we do get that crash or anything that comes across with it. So this on the screen right now that I've put on the left or right, wherever it is. So the institutional ownership is rising with Oscar, as you can see here with the graph. So that's quite interesting, so I just thought I'd put it on there. So you guys can pause it, look at it, or go into more research with that. And then the next thing that I've put in the premium channel group as well is the Oscar members. If you look at the Q1 2020, how many they had, and then compare it to Q2 2025 with 2 million, that's a massive jump. And if you have a look at this video, this little podcast on YouTube, you can actually see the CEO, Mark Bertolini, say that we can serve up to 125 million people. So he thinks they can serve 125 million people, which is a lot bigger than the 2 million at the moment. So I think Oscar's just got a lot of promise, and like I say, go back to my YouTube video of Oscar if you want more information. Palantir down 1.4%, the most controversial stock I probably have ever held, to be honest with you. I've got 500 shares. Yes, I've sold shares of this. I've pretty much taken my initial out with Palantir, so this is just kind of free ride money in a way in that sense, but obviously I don't want to lose the money. But I still see this company being, I think it'll be a $1 trillion company. Obviously I don't want to put a time horizon on when, but I see it being a $1 trillion company, so I just don't want to sell it or trade it and see if I can get in at a better price. It is what it is. If it goes down to $100, it goes down to $100. I do think actually a lot of people's average price targets, don't quote me on this, but I'm pretty sure I saw at the moment people's price targets, and you got to take it with a pinch of salt, it doesn't really mean much, but about $130 I think people have for Palantir, which is a bit mad. My average is $19.36. Snapchat is actually one that I bought some shares in, a few shares. Obviously you can tell the position's a lot lower, as I'm still just getting a gauge of everything, doing some more research with Snapchat, because it is a bit of a tough one to get into because of the CEO, like the management with it all, and that's the thing that lets it down. But if you see the growth with Snapchat, it is there, and you can't ignore that. And 2027 is when analysts think this will be a profitable company. And obviously I do like to get in companies where they're turning into a profit and going to become profitable, because the growth, then you can start seeing like the EPS changes dramatically. But yeah, it's a smaller position at the moment. Got my average to $7.61. If you look at the max graph, it's way down in the dumps. The settlement is awful, really bad with Snapchat at the moment. Yeah, I mean, the company's in a better position than it was then, and it was $70. It was in a better position now, and the stock price is, yeah, but obviously it's because they're just struggling to become profitable, and the stock-based compensation is a joke, to be honest. The amount of stock-based compensation they give out is insane, compared to most other companies, but it is what it is. Hopefully they can eventually change that, because that will help EPS a lot. But Snapchat is something I do want to get a bigger position into as well. But obviously, like I say, Oscar is taking priority at the moment, but I did buy some Snapchat, I did. So yeah, SoFi, 100% we're on this now. Amazing. Yeah, incredible really. 2,020 shares. I remember when we were sharing this as well on the YouTube and people were like hating on it. And that's the thing, that's another common theme. A lot of people hate on it and no one wants to get into it when it's down in the dumps and nothing's happening. Because why would you naturally, you just don't. And then when everything's going up, you want to get into it. It's just weird how the human psychology works. But yeah, I mean, the fundamentals were good back then. They're even better now. So yeah, it was a no-brainer for me, to be honest with you, to get into SoFi. Tesla down 1.7% on the week and up 46%. So yeah, I've got 39 shares of Tesla. This one's just been trading sideways for God knows how long now, to be honest. Yeah, a long time, let's just say that. On the week, we're down 1.2%. It's not actually as bad as I thought. £1,800 in the week. And if you look at the investments, we've got £149,991 in the portfolio and £409 in cash. So yeah, if you did enjoy the video, please give this video a like, subscribe if you're brand new, and I'll see you in the next portfolio video.